Good morning, Hubert Johnson here with Taxes Made Easy. Welcome to another week of having fun with taxes. So today we're going to go into the weeds and we're going to talk about appeals. So how do you fight the IRS when you don't like their decisions, when you don't think their decisions are correct? So knowing how to contest a decision, stand up for your rights is absolutely important. And so we're going to be talking about a lot of different things throughout the entire process. We're going to give you a map that you can go in and kind of see. It's a huge, crazy flow chart, but when you slow down and look at, okay, where am I in this process, it can guide you through. So that's going to be the focus of today. And welcome to the show, everybody, and thank you for watching live or on rebroadcast. We'll be right back in just a few minutes. Welcome back, everybody, to Taxes Made Easy. Hubert Johnson here from Guarding Tax Law here on the Smart Money Culture TV. So today, just kind of want to give a broad overview. Everybody sees the IRS and feels like it's a giant behemoth. You can't fight it. You can't work with them. They're very difficult to work with, which is very true. However, if you know how to work with them, you can get answers and you can also get in contact with the right people. As it's a giant bureaucracy, you have to know how to work within the bureaucracy to get to the right people. Now, what we're going to talk about today, I've touched on various times, but we're going to kind of put it all together one package, how to appeal the IRS. So we're going to go ahead and I'm going to share my screen real quick. And this is a handy little video. So it's going to be we're going to share this roadmap tool. Okay, so we're going to zoom out a little bit so you can see this. So this is a handy little tool. It comes from Taxpayer Advocate. So you can go to if you just type in Taxpayer Advocate Roadmap, it should come right up and you can download this. So this kind of is pretty much an overview of the whole process. So let's minimize that and we can actually zoom in a little bit. So it starts off, and we're going to use this to kind of go through the whole process here. First step, you begin preparing your own return. So you have to zoom in. You can zoom in and see. Okay, you gather information, seek answers to tax questions. These are the different ways that they can help you. Taxpayer assistance, tax return preparers, softline, And it just kind of walks you through the process. So this is a very in-depth flowchart. And it gives you plenty of resources and ways to address things from the IRS perspective. But yeah, using outside preparers, this is actually a very good roadmap for the most part. So when you file your return, it goes to the IRS processing station. Now, it kind of breaks off between if it's a refund or a balance due. And so it goes through if you do owe, what can happen if you have a balance due, or if the IRS corrects issues, if they question it, then they're going to do either a notice of deficiency or an AUR, so automatic underreporter. So if things aren't correct in your tax returns, they'll question it, and then you always get a chance to contest it. So really, this is what you need to look at. So, and it's color coded, which makes it a little bit easier to do. Once your tax return is processed and they decide what's going to happen to your return, either if it's questioned, it goes to exams, And this is where you have an opportunity to go back and forth with the IRS and question what's on the return, not only what's on the return, but to provide proof to substantiate it. So believe it or not, they have IRS it's not new. They're just doing it a lot more. There's one type of exam where there's nothing wrong with your return initially, but they will go in and question everything on your return. It's known as the exam from hell. And again, we've had clients go through this. This is why it's so important to document, have everything together, and they go through everything with a fine-tooth comb. They don't have any questions. They just want to review everything and make sure everything was done correctly on your return, and that you have substantiation for all expenses, all credits, and they require that you prove everything up. So most often happens to small businesses. So be aware, have your documents together, keep that proof for 6 years, and then after 6 years, when they can't come after you and audit you anymore, that's when you can get rid of that. Get rid of that proof. But it'd be smart to always keep it on in a digital format. Okay, so here you flow through exams. Now in exams, I'm just going to go over this and then break it down. Whatever comes out of here, is there's a balance, then it flows into, it comes back here, and then it flows into collections whenever there's a balance. So collections, this gets a little more fun. They have some private debt collection here. They have other issues, and things flow back and forth. If there's a question during the collections process, can be sent to exams. It can come back again. It flows to here and then back through into collections. There's litigation. So if you go to tax court, that is also appealing it. So we're going to focus on taxpayer files appeal or claim for a request. This is really what we're going to be focusing on today. But broad scope view. Throughout when you're preparing your own return, you're not going to appeal it. But when it gets in here, and part of it is we have cases where the returns were filed. The IRS has lost them. It's fallen in a black hole, stuck in between two files or whatever. And there's times that we have to file an appeal or get taxpayer involved just because the IRS hasn't processed a return. And it turns into 6 months, a year, 18 months. When you hit that past 6 months period, this is when you really should start escalating the case and say, hey, you've had this. It's been more than 6 months. What's going on? A true story. I have a couple of cases right now where we're doing this exact thing, and we have gotten them processed and shoved through their process by turning to Taxpayer Advocate or dealing with managers, etc., that can actually access this information. So if you don't like what's happening in exams, you can always appeal. So right here you have this little purple line that goes all the way around. So you request an appeals conference. It is very important to remember that through the entire process, you have rights. When you're in appeals, you should, if you don't like what's going on, or you just need a clear explanation, or you don't think your auditors or examiner is doing the right thing, ask for a manager. They all have managers, and this is what they do. So ask for a manager, call back, or ask to speak to a manager. And if that doesn't work out for you, you could always ask for appeals. So when you appeal it, you always have a right to talk to an appeals officer and see what's going on. So here, this is where it comes into appeals. You go through the appeals process. It's essentially a second bite at the apple. Someone new with a fresh set of eyes that focuses on resolving issues takes another look at the case. Now, in most cases in exams, and here's a little word to the wise, exams are not CPAs, they're not bookkeepers. For the most part, examiners, in exams and when you have a full-on exam or audit going on, they're just trying to get to a reasonable resolution. So they're looking at what you submitted. Either you need to provide proof and show, hey, this is what actually happened, or they're asking for you to explain what's going on. And a lot of times, if there's good and bad facts, a lot of times they just want to split the baby, so to speak, and get to something that's acceptable to the IRS, but the taxpayer's willing to sign on for it. So, true story, had an audit going on, and I know I've mentioned this before. This is the gal that some of the bad facts for her was that she labeled as a charitable contribution $100,000 paid to a private school, but it was because her son had taken some quads and done donuts on the football field and destroyed the field. Not too smart. And the school told her, well, your son's expelled, but at the same time, we're going to press criminal charges unless you pay for the damages. And they didn't want to pursue criminal charges, against a teenager, but she paid for the damages and labeled that as the charitable contribution. The school didn't care, whatever, but if the IRS looked too closely at that, that would have been a huge game changer in her case. So she had some other really bad facts for her, but there were a lot of things that she had claimed that were questionable, or she should have gotten credit for. So the IRS was really digging into this case on 3 separate occasions. We looked at it. I came and said, look, let's take a slap on the hand. She'll have a couple $1,000s in liability after that. She can pay that off, and then we can move forward and wrap this up. So I got what was, I thought, a decent resolution, because yeah, she gets a slap on the hand because she wasn't doing everything right, but then they were going to ignore these larger issues that, of course, I wasn't raising, but if they looked closer at them, it would have been a huge problem for her. She insisted that she shouldn't owe anything. And so I took it to the manager. The manager came back. The auditor was actually pretty generous, but she was not willing to take any responsibility or acknowledge how she was trying to play the system. And it got to the point where we actually parted ways because she would not agree to anything reasonable. And it just turned into a nastier mess because the more she dug in her heels and fought, the more the IRS was adamant that they were going to come after her. So again, be reasonable, work with your representative, and try to find something that works for both parties. So we're going to be right back. We're running onto another commercial break, and we're going to dive more into how to file and move forward with appeals. Welcome back, everybody. So as you can see, we've kind of focused in on the appeals tab here with this handy roadmap. This is really what we're going to help walk us through today. So any section that you're in, so if you're in exams, you can request an appeals conference to have your case heard. But most of the appeals come from when you're in collections. So anytime you see a purple line taken off, from here, this is where you have an opportunity to file an appeal. And so all this comes over to the appeal station, and then from here, the black dots kind of show, okay, this is where the appeals process starts. And we're just going to walk through this piece by piece. So first of all, you get a 30-day letter, collections letter. You can protest that, request a telephone conference, face-to-face telephone conference, and then the appeals will consider, should we do this or not? If they agree with you, you can win. If they don't, if taxpayer agrees with, if you agree with the IRS, then a different process, it usually flows right back into collections. And then you can timely petition it, and it can come right back into here to restart the process, or it can go into litigation. Now, word to the wise, exhaust all of your remedies and appeals before you go to litigation. There are some exceptions where you can lose your rights in litigation if you plan to go there, but if you do plan to go to litigation, make sure you have a case that makes sense to go there. It can be very expensive, it can be very costly. So, to go to litigation. If it's not, if your case doesn't warrant it, I would absolutely talk to a tax professional, say, hey, is this something that should go there, or are there easier ways? And a good tax professional will go over your rights and options and discuss, does this make sense? Is this something we want to do? So as far as it goes through the process, either you agree or you don't agree each step of the way, and then it comes right back around into appeals, or goes to collections or litigation, one of them. So if you file a tax return, an amended return or an original return, and you're saying, okay, I'm requesting an appeal now, or a refund. So if you haven't filed it, you file an original return, and you're asking for a refund. If it's denied, that's where you can protest it and say, hey, I requested the refund, it was denied. And we do have cases exactly like this where someone was entitled to a large refund and they filed an amended return, and didn't have their books together right, or something happened where they didn't have good information at the time. Now, you can always contest their decision not to give it. So really the main thing I want you to take away from this is that you don't have to roll over and take it from the IRS. You can contest these decisions, you can appeal them, and get heard. So there are layers of opportunities to get your cases addressed within the IRS. So they go through this, if they agree, disagree, and then you can go to court. Now, it is important here that to know that there are times here, there are deadlines, and this is where we're going to touch on this right now as we go into the next one, called a collection due process request. So what is a collection due process, or CDP case? This can happen anytime the IRS has issued a final notice of intent to levy, or a final notice of filing of a tax lien. So your last warning before the IRS does something to you. So really it is, last notice. So they'll send out 3 notices on collection. So notice of levy, then they'll send you another notice of, actually NOIL is what they're called, a notice of intent to levy, and that should be in bold on the top of the letter. And then when you get a final notice, it should come certified. When you get that final notice, I would be moving the first time on cases, and people will ask me, when do I have to be moving on this? And I'll explain the process to them. I said, I prefer, and it's much easier to handle a case when you start early. But when you get those final notices, that's where, hey, you've got to be on top of it. One of the concerns here was CDPs, and I mentioned this before, that some firms, they file a CDP on every case. They just file it like candy. Boom, boom, boom. It can preserve your rights, but it also can really upset the IRS. So you can use these for a delay tactic, but the problem with doing that is too often I've seen people file CDP requests, they use it as a delay tactic, and they don't, or them or the taxpayer, they don't use this time this delay time to move the case forward, to get your returns in, to get your full financials ready, so that when it comes back, if your case is denied, and most of them that are filed are frivolous, people just ask you to waste time. Then if you have your ducks in a row, you can have a better case. But again, the worst thing you can do is file multiple CDP requests. So if you file it within 30 days of the notice intent to levy, not only do you preserve your rights, but you also can go to litigation. So if you can go to tax court and say, hey, they really shouldn't have done this. So the interesting thing with the collection due process, it's really you're claiming the IRS did not do their due diligence, they didn't follow all the steps, and they incorrectly are, either the underlying balance is incorrect and you're trying to get that waived, or they didn't follow their process. They didn't send you all the letters, you didn't get your rights were not respected as a taxpayer. So you really have to show that the IRS messed up. This is why a lot of times these are frivolous, because the IRS, if nothing else, is very good at following processes. They're very good at going from step A to step Z. There are times they do make mistakes. And if you do win on CDP appeals, if you're just saying, hey, they didn't do the right process, I didn't get the letters, or the letters weren't sent, then you can show, look, they didn't do it right. They've got to go back and start issuing these letters again. Now, not getting the letters, I do want to touch on that. Many people, and I see this all the time, claim, well, I never got the IRS letters. How was I supposed to know? The IRS, once they send letters, they will use the last address on file. It is your responsibility to update the IRS with your address. So if you haven't filed in 6 years and you've moved 3 times, how's the IRS supposed to know? So it is actually fairly common that when people get hit with levies, with garnishments, they don't know. And the IRS considers that, treats them like they're hiding from them. So it is very important to have your mail forwarded, to update your address whenever you file a new return. And if you don't have a filing requirement, they shouldn't be coming after you anyway, but the states are notorious for this, especially California, New York, where people are moving out of the state all the time. And it's very common that people move, they send them tons of letters, and then they get surprised when their bank account gets cleared out. As long as the IRS or the states follow their process, your due process rights were followed. So just because you didn't get letters, don't think that's a valid way to get that released. So going back into the CDP process, you get a telephone conference. They make sure all the administrative requirements were followed, and then they either make a determination or you can take it to appeals. So one key thing here is a lot of times people aren't appealing it within the original 30 days. They're trying to contest it. They don't know what's going on. Can you, after 30 days, still get what's called can you still get this bite of the apple? The answer is yes. So within 1 year of the CDP notice or the notice, you can ask for what's called an equivalent hearing. So you can still ask for this after the fact. The only difference between this is that with the CDP, you automatically get it. With the equivalent hearing, you lose some rights. So you can't go to appeals, or you can't go to litigation if you did the equivalent hearing and not the original within 30 days. So if you know this is coming and you, again, want to get as many bites at the apple as possible, do it within 30 days. But again, if you don't feel like they're doing it right, or if the penalty was incorrectly assessed, if what created the underlying balance of penalty. If something like that was done incorrectly, you can always appeal that and get the underlying penalties removed if the IRS finds in your favor. So, going to switch gears a little bit, talking about the CDP. Once you go through the process, you have to make sure it gets received, that they process it just like anything else. Follow up, follow up, follow up is so key here. So depending on the determination, you either go to collections, or if they agree with you, then you, if the IRS does not agree with you, then you can, within 30 days, file for a petition with tax court. And that's where you go to litigation. Or if you don't contest it, then you get sent back to collections to the red area. Okay. Again, don't use these just to kick the can down the road. It buys you a little bit of time, but don't just waste time with these. The second thing, and this is the cap appeal. So the cap appeal is a different process than the CDP. You don't have to do it within 30 days, but you can appeal a lot more. So you can actually appeal an offer and compromise determination with the cap appeal. So we have this, you go to the appeals conference, make the appeals determination. So we have a case right now that we're doing a cap appeal on. So the case is that the people hired us, she's on Social Security, and the IRS has decided to take all of her Social Security. Can they do that? Technically, yes, because there's a lot more household income. And when they tried working with the IRS, they said no, they're not going to do it. So we said, okay, we're going to present her financial information. And based on the information on the 433A, they shouldn't be taking the entire Social Security amount. We can show that she has basic bills, that she has, roughly they should only be taking about half of it. So we're going to get it set up where she gets about $600 back in her pocket because she has some living expenses, even though her husband pays for most of it. And the revenue officer told us no. She told us she's not going to consider it. She's not going to follow the IRM and the financial standards. She's looking at this case and she goes, no, they can pay. As a household, they can pay. Problem is, the husband has absolutely zero liability here. So saying the husband can pay for this and we'll just take everything out of the wife ignores the rights of the husband who doesn't owe. So we try to get a manager. We tried to escalate the case. We finally got a hold of a regional manager. The regional manager looked at the case. And again, this is just because you have a revenue officer doesn't mean they're the final say. She gave us a number for her manager. Turned out it wasn't her manager. We called and called and nobody ever responded. So we went back to collections and asked for either who really is her manager or who's the regional manager. Give us one of those managers. The actual manager was out on training, etc. But it wasn't even the person that she had provided to us. So they had an acting manager that hadn't been provided to us. He wasn't available, so they got us the regional manager. We spoke to the regional manager. She said, file a cap appeal. We'll have this done in 2 days. So this is a clear example of when the revenue officer was not following the rules, made her own decision, and was ignoring the rules and regulations of the IRS and the taxpayer rights. And does this happen all the time? No. But it absolutely does happen, and you need to be aware of how to contest this. So by escalating the case, we got the answers we needed. We filed the cap, and our client should have another $600 in their pocket. And yes, we're following an offer and compromise, but our goal was to get the offer and compromise done. So one question here is, is there any consequences for a revenue officer that completely blows off the rules? The answer is absolutely. and I'm going to stop sharing here for a sec. The answer is, and this don't do this on every case. I've only done this a handful of times in my entire career. I've threatened to do it more often than I've actually done it. I had and this is to file what's called a TIGTA report, T-I-G-T-A. So you can look it up. This goes through the Treasury Department to report misconduct by IRS professionals. Now, this should be done rarely. This should not be a common thing. In this example, this revenue officer completely ignored our rights, our request to speak for a manager, did not follow the Internal Revenue Manual, which is they're required to follow. So yes, we're going to file a TIGTA on her outrageous behavior. She will have a black mark on her record, and that's something she's going to have to address or deal with throughout her career. Hopefully she learns you don't blow, the taxpayers have rights, and the IRS does not have full control to walk over people. I had a similar case. Well, it was a bit different. This one was a revenue officer, and the revenue officer was newly assigned. And again, I've talked about how they are being trained. Today, the IRS is training their new employees to be absolutely outrageous. And the people that have been there longer understand, and they're like, no, we're trying to work together. This is a simple case when all we're trying to do is set up a payment plan to get the IRS paid in full. You would think that would be pretty easy. If you just want to pay the IRS in full, the client had the funds. Interest rate had just shot up to 8%, had just been increased again. And so they're like, look, I just want to get rid of this thing. I just want to make sure my payments were taken care of. So we went in, got the current account transcripts, showed the payments, and I had already pulled them, but they got this information directly from the IRS. The entire time, the revenue officer, this brand new revenue officer, didn't know what she was doing, was bad-mouthing me right to my client. I got to the point, I was like, are you going to do this professionally, or are you going to continue to do this? And like, I was telling the clients, look, I just want to get through this, to get you guys taken care of, and we can move forward from there. Eventually, I said, look, this is ridiculous. I'm not going to take this kind of verbal abuse. I've never had to put up with this. I asked for a manager. I said, get a manager in here now. She wasn't able to get her manager, but she got a supervisor. And the supervisor was great, had no problem. We went through things, got the case taken care of. And I told the supervisor, with the revenue officer right there, it's like, normally I would file a TIGTA report on this. She's new, she doesn't know, and they've been trained poorly. So I didn't, but I warned her. I was like, if this is how you behave in the future, I absolutely will do this. And we've got another break. We'll come right back. Welcome back, everybody, for this final session here at Taxes Made Easy, talking about appeals. So appeals is very important when you don't think you're getting heard, when you don't think your rights are being respected. You do have options. You can, again, always speak to talk to a manager. And for some things, like with a cap appeal, you need to talk to a request a manager conference first. If they don't respond in 2 days, you can file the cap appeal. So just before we hit the break, I was talking about this revenue officer that was very rude, very disrespectful, and making things very difficult. So I had threatened to file a TIGTA report, or I told the senior revenue officer, I was like, look, you've been great, you've been wonderful. That is ridiculous, and I know I'm going to have to run into that gal again. I did have another case assigned to her, but I think they reassigned her. I don't think she lasted very long as a revenue officer. And unfortunately, when they train people to be unprofessional and to assume that all taxpayers are trying to rip off the system and that their advocates, that their representatives don't have aren't doing a legitimate job, that's a violation of client's rights, because one of the first things you should get is publication one. And one of the rights of all taxpayers is to be represented. Now, have I had other instances where a revenue officer was like, I don't know why you hired somebody? Yes, it's I should probably call it the IRS a little bit more when they do that, but usually very quickly on, because we do quality work, that change their tune changes very quickly, and this is usually the first time I'm working with somebody. So we had a case where a revenue officer did that. Again, it was an inspection, on-site inspection of a business. So we showed up, we knew about this, we prepared for this, and the revenue officer sat down and said, well, I need A, B, C, and D. I'm like, look, well, we've already gotten your notice. Here's everything, and we pulled everything out. It was tabbed. It was all ready and prepared for me. He looked at it and he's like, really? And so he went through it and he's like, oh, well, okay. And he made the comments like, I've never seen someone this prepared for meeting with the revenue officer before. I'm like, well, we want to make your job easy so you can get this case off your plate and get a good resolution for our clients. He said, fair enough. By the end of the meeting, he was not exactly singing our praises, but he had changed his tune and his demeanor completely. The clients were very stressed out, and everything flipped on its head when he said, okay, I see you're actually helping us move this case forward by getting things done, moving it forward in the right direction. And honestly, the quicker you satisfy a revenue officer, the sooner you can get him off your case, so you don't have to worry about him. And that really should be the goal. Get the revenue officer off the case by giving him what he needs to wrap up the case. And that's how I resolve cases successfully all the time with revenue officers. That's our normal modus, how we try to operate. I'm going to talk about one last appeal unit, Taxpayer Advocate. Now, we had that big roadmap coming up, and I'm going to go back to share my screen. Ironically, Taxpayer Advocate isn't on there. And that's because it's an outside agency. It's a little different. So let me go ahead and share my screen. And this is, I'm going to just, here we go. Share. This is, you can always look up the forms. So, and there's plenty of blogs. So this is the form 12153, which is the CDP form, or the 59423, which is the CAP appeal form. I just want to mention that real quick, but we're going to go to, again, that's Taxpayer Advocate Map. That's how I pulled it up, or TAS Roadmap. You can see that right there. But I'm just going to look up Taxpayer Advocate, because I want you guys to see and follow the same thing. Taxpayer Advocate at the IRS. So this is taxpayeradvocate.gov. Great place to go. Okay, and I want to kind of walk you through this so you see, okay, how do I find the taxpayer advocate that's right for me? So there's a form to file for the taxpayer advocate, and it's a 911 form. So basically, you're saying it's an emergency. I need to have something happen on this case. Now, the interesting thing about taxpayer advocate is it doesn't necessarily, they usually will put a hold on a case when you do a taxpayer advocate, but ideally, and then in the past, they were assigned fairly quickly. Now, it can take 6 months or more to get the taxpayer advocate assigned, because post-COVID, they were one of the few agencies that could actually function, and we used them to good effect right after COVID. The problem is that it's gotten to the point now where they're so overwhelmed because there's so much need in the IRS. In the last few years under this administration has become so much worse. People are resorting to taxpayer advocate all the time. So if you can resolve your case without going to taxpayer advocate, great, do it. If you can't, so these are some of the cases that we've taken to taxpayer advocate with success, where the IRS is not processing a return, or they're not processing a refund or abatement, and it's kind of fall into a crack. We don't know what's going on. They can reach deep into the IRS, contact the people that should be moving the case forward. And while they can't tell them what to do, they can make sure, hey, that someone's moving on it and open up that connection. You'll get someone moving on a case. The problem with Taxpayer Advocate is that you have to follow up with them, and they will focus on one issue at a time. And because they're so overwhelmed, if you don't stay on top of them, I've seen this too many times where they will just close out a case and move on to the next case, which doesn't help you. So we're going to go contact them. How do you? They could find a local TAS office. This is exactly what you want. And right here, up here is the Taxpayer Bill of Rights. Read it. It's also publication 1. You can get that. So this is how you get a hold of your local taxpayer advocate. So we went to the main thing, contact us, find a local office. So it breaks it down by where you are in the country. So let's take Pennsylvania. 2 offices in Pennsylvania, 1 in Philadelphia, 1 in Pittsburgh. So you can email them, call them, fax them. When you first submit your 911 form, it should be faxed. And I would also email it to make sure that they get it. The IRS does not prefer emails. They always prefer faxes. But once you get that, you can either go into their office, or usually the best way is to call. And so they can be very overwhelmed. You have to be very patient once you submit the 911 form. Like I said, it could be 6 months or longer till someone's actually assigned to your case. And once someone is assigned, you'll have a direct number for them. And you have to call them, because they are overwhelmed, but they can do a lot of good for your cases. We've had cases where penalties need to be removed, and we submitted an abatement form. We used a taxpayer advocate to follow up on a difficult case. One case was a gentleman owned a golf course, and it was just him, and he had some part-time help, but he was the only one, and someone gave him the bad advice to open up a 401k. He didn't know what he was doing, how to handle it, so very soon he ended up with a penalty of over $100,000, but I think the most he ever had was about $60,000 of his own money in it. And he said, this is a mess, try to reverse it, close it out. And so he stopped doing it. But did it make sense for him to get hit with the penalty of over $100,000 when he only had about $60,000 of his own money in there? You know, the penalties are there to make sure that people don't use and abuse their employees' money. Since it was just his money, we were able to get the entire $100,000 waived. But we went through and we filed the abatement. But because it took a long time, we knew it was going to be a weird case. We got Taxpayer Advocate involved as well, and they helped us out. Taxpayer Advocate cannot tell a revenue officer what to do. They can't tell an offer and compromise. They won't get involved in offer and compromises or most installment agreements, but they can make sure that the IRS someone is responding on a case. So an audits, etc., they can make sure that an audit reconsideration is heard. And so I know I've mentioned that before, but that's part of the appeal process. You could always ask for an audit reconsideration even years after an audit was determined. You wait too long, though, you lose your rights. So it is a very useful tool. Again, you pick your state. They have number. Here's, you got one office in Baltimore. They have national numbers, but the best way is to reach out, contact them, go into their office and talk to someone about getting that taken care of. Now, one other issue, and this isn't exactly appeals, but this is a way to get your case addressed. So there is a phone number, and I know that I've given this out before, and I just want to make sure that I do this again. This is for to make an appointment and go in and see someone. So in my cheat sheet, I have all kinds of phone numbers on here. And this is where you can walk into a local IRS office, sit down with someone, and get your questions answered. Now, this appointment line is 844-545-5640. Again, you have to call later in the afternoon, ideally later on during the week, because they do get so slammed, and it might be 30 to 60 days before you can go in and actually talk to somebody. But when you talk to somebody, when you make an appointment, you get to go and actually sit down, discuss your case, and have them look up what it actually needs to be done in that case. So again, one of the things I shared was a Guam case, where they had to file a separate return in Guam, and most people don't do it unless they're actually in Guam. Same thing with Puerto Rico. I just ran into just last Friday, I was talking to another tax preparer, enrolled agent, that all she does is tax preparation, and she specializes in Guam and Puerto Rico returns, whereas most people don't even know. And I had very experienced CPAs say, "Look, I've never done it, don't know anything about it." And so and I've done that with other cases where we had hit a brick wall, things kind of fell through the cracks, and we're like, the taxpayer just wanted to sit down with someone and say, "Hey, let's sit down, let's have an appointment and talk to someone that can," and you go into their offices and you sit down and you pull up the case and make sure everything's done. I've done that. Another case was a grandparent who they had claimed their grandchild on the return, and the IRS was denying them, had denied their grandchild as a dependent. So we got all the records together, showed that, look, they lived with him, the school records were there, doctor's notes, all this stuff. And we went in, we said, "Hey, what are we lacking here?" And so we provided all of it, and they pulled it up and they're like, "Well, they were asking for A, B, and C. You have B, C, and D. Just send this in with it, resubmit it. Here's where you resubmit it." They can be very helpful to make an appointment and actually go in and talk to the IRS. So believe it or not, the IRS representatives, their whole job is to help you out. Too often they get the wrong idea and they treat taxpayers like criminals. But if they do their job right and you hold their feet to the fire, they're there to assist you, to resolve issues, to address taxpayer issues, collection issues, all of that. But the number one thing is you have to show forward progress. As long as you're showing forward progress, consistent progress, you can do a lot with the IRS. You can have a very satisfactory case. But worst case scenario, don't sit on your hands. Don't ignore the IRS, because that's when things get nasty. And that's when you appeal it, if you look like you're a bad player, you're not going to get much results. If you haven't been straight and honest with them, if you don't have clean hands, so to speak, the IRS is not going to be very sympathetic to you. But if you've done what you can and you showed forward progress, I can go to bat for you. I can argue for your case, even if you have a bad history. Once you show that you're now moving forward and you're getting things done, that gives you, your representative or you, a lot of ammunition and go in and argue that the IRS needs to give you some kind of deal, some kinds of resolution. And there's very, very few people out there, situations where no deal is available, or I can't help you. That's very rare. That's usually when it's going to criminal, or you're already in the middle of seizure actions and you need to go file for bankruptcy right away. I don't see that very often. That is very rare, but I have seen that happen. I've got some funny stories on that we can share in a future episode. So Hubert Johnson here with Guardian Tax Law. Taxes Made Easy. If you have any questions or to reach out to us or to reach to the show, reach out to the smc.tv, and we're on every single day, Monday through Friday, and look forward to our next show and answering your questions. Thank you, and I hope you have a great day.